Hey, Kevin here, top 100 financial advisor and best-selling author, and we are here to talk about the stock market. Today I want to discuss earnings for Apple, Microsoft, and Google. Now, there are dozens of companies that are announcing their earnings this week. I mean, like more than 50. Like, if it's like everybody is announcing earnings this week. So, if you want me to cover one, all you got to do is type down in the comments below, public, Instagram, Facebook, YouTube, wherever it is that you want to talk to me. Feel free to say, hey, look, this company is announcing earnings. Let me know what you think. You know it's already going to be a busy week because I've already done a video on Robinhood, which is another question that y'all asked about. But Robinhood goes public on Thursday. That's going to take up a lot of airspace for a lot of people. So just throwing it out there now. You want to know about a company that's announcing earnings, feel free to let me know. But we already know that Apple, Microsoft, and Google are three of the biggest tech companies, period. But especially for Apple and Microsoft, one of the top, I would say top 50, we know this for a fact, top 50 stocks that everyone does own, or not everyone, a lot of people do own. So I do want to discuss some things that stood out, what I think about it, and we'll move forward from there. So Apple, I've got my notes here. Apple sales were up 36% from the previous June quarter. So remember that quarters are 3 months. We announce earnings 4 times a year. Earnings are essentially, like I say, report cards or discussions where companies come out and say, hey, look, this is what we're doing. This is what we're thinking. This is what went well. This is what not went well. And each of these companies have some things that went well and did not go well. And I think it's always telling and important for you to at least read the headlines. You definitely want to read the article, but if anything else, reading the headlines can kind of give you some indication. But if you got to pick and choose, definitely read the article. But whether it's the headlines, the articles, or even the actual report that they put out, which is going to give you the most information, it's always important to do so, and it does help you to learn more about a company. So there are companies that I will go to the website, hit investor relations, and then go and look at that report, and it helps me to understand what this company is. Sometimes I do this months in advance. There are some companies that I'm interested in. I'll say, look, I'm not going to invest in you now, but I am going to check you out come earnings season so I can just figure out what y'all do and what y'all are expected to do. So all that aside, their sales are up 36%. iPhone sales increased 50%, which I think is impressive. They also had a decent rate of people switching from Android to iPhone. The reason why that stands out to me is because I was one of those. I'm just always curious as to how we're always asking ourselves, how do they grow, how do they continue to make money in that space. Having people switch is one of those, and that's one way that they've been able to do that and increase their revenue. Now, they did have one thing that was not all that great, and that they already came out and said, look, I know that y'all saw 36% growth. You might not see that moving forward, which is smart on their part, because 36% is high. You're not always going to be able to keep up that type of pace. However, the reason why they say this is because, one, people could be going back to work, which is going to reduce some of the revenue streams, like Apple streaming TV. You may not be watching TV as much if you're going back to work and going to office and going outside. That's a fair comparison. But the biggest thing is this chip shortage. That is hurting so many companies, not just Apple. So it's hurting Tesla, it's hurting Ford, it's hurting GM. It's hurting the fact that I still can't get a PS5 because they don't have enough chips to make them. So that's another issue. But for Apple, they're saying, look, we're going to manage the best we can, but if we don't grow the way we did last quarter, because we don't have these chips primarily for our iPads and our Macs, but to a lesser degree to the iPhone as well. So just something that you do want to know, I think, for obvious reasons. And I own all of these. I think most people already own these companies. But yeah, I'm going to keep buying until there's some huge red flag. The chip shortage is not permanent. It will fade at some point in time. If you want to know a better resource as to when this shortage will fade, I would go to companies like Nvidia. I would go to companies like Micron. Read their reports and see when they think that this chip shortage is going to kind of fade out. I've seen some things that say that it should have been over by now. I've seen others that say it's going to last a bit longer. Depends on who you want to trust. But in either case, I know it ain't permanent. I think that Apple is a strong buy and will continue to be so for the foreseeable future. I don't think I'm stepping out on a limb by saying that at all. All right, so the next one is Google. Now, I'm really excited about Google's numbers for a few reasons. The biggest reason is I said this in November, I said this in December, and I even wrote it down on a PDF that could not be changed. And I said that Google was a stock that nobody was talking about. Yes, you've heard of it. Yes, it's a big tech firm, but when people were looking for growth, especially at the end of last year, looking into 2021, before we figured out what all was going to happen, everybody was on Tesla. Everybody was clearly on Apple, right? People were on Microsoft, which we'll talk about, and I think that's obviously a good company. I think all three are good. But I've been saying that Google was the one. And last year they had some incredible numbers without having their big cash cow, and that is advertising. And I said, y'all, look, when businesses shut down, they're not going to advertise. But Google still, whether it was Google Home, whether it's YouTube or whatever, they still did so well. I said, look, this is the time to get in now, because once things start ramping up, once we get back outside, they are going to explode. And that has happened. So, for example, ad revenue is up 69% from last year. Now, yes, if nobody was spending money on ads and people are, yes, you're going to get a higher percent jump. But I ain't done yet. So, YouTube alone brought in $7 billion in revenue. Okay, I'm going to say it again. YouTube is a division of Google, which parent company is Alphabet, but Google by itself brought in $7 billion. That is getting close, dangerously close to all the money that Netflix brought in at $7.38 billion. That is one division bringing in as much money as an entire company. That is huge. Okay, so that was really impressive. Google Cloud brought in $4.63 billion, up $3.01 billion from a year ago, and that cloud business is still operating at a deficit. They are losing money overall. That's, you know, the money you bring in minus the bills, so they're actually in the negative column there. But it is a drastic improvement. What you want to see anytime you're doing something new, you want to make sure those losses are narrowing until you become positive. So for this this exact example, there's a dramatic improvement from last year's loss of $1.43 billion. So that is big. They lost $1.43 billion last year. Now they narrowed it to $591 million. That's a big closing of the gap, if you will. So again, great signs for Google. The company is up 81% in the last year. I did mention this for Apple. Apple is up 60% in the last year. Now again, I'm excited for Google because I put in an email. I did a collaboration project, if you will, called the Investors Yearbook. I talked a lot about it in January because it was us choosing stocks for the coming year. We did this in December. We released it in January of 2021. You can still get that if you want. That link is below. And essentially, it was top 5 stocks for new investors, stocks that I thought nobody was really talking about. Google was mine, and it was the best one on the list. But you had me, and you had 3 other experts that are very, very good in their fields talking about what stocks they thought were going to be great this year, what are some of the passive stocks that are just solid, all that stuff. You can check it out, buildingbread.com/2021. I'll make sure the link is down below so you can kind of check out that resource. But it's a really nice PDF that talks about, that gives each of our perspectives, best ETF, best stocks that nobody are talking about, so on and so forth. So you do want to go and check that out. That link will be below. All right, so the last one is Microsoft. So Microsoft revenue jumped 21% from a year ago. That is very good and solid, but this is a dip. And I think we're talking, revenue jumped 21% from a year ago, but this fell from 30% in the last quarter. So when you're looking, you say, oh, you grew 21%, which I think is good, right? But you grew 30% before. It's like, well, what's going on here? So stock actually fell a bit. Now, Microsoft is still up 30% year to date, which is way better than the 17% that the S&P 500 is up. But hey, you know, the stock market isn't always kind, but I'm still picking Microsoft versus the field right now, and it looks like that lead is going to continue. Now, the companies, you know, I'll say this. So Microsoft is in a weird spot. You know, each of these companies are different, right? They're known for different things. They clearly do different things, and in some cases, they overlap. So the thing I like about Google is the same thing I actually like about Microsoft, in that they have a bunch of different types of businesses that can help you in times like this. But in this case, it actually kind of hurt Microsoft to a degree. So for example here, I'm looking, we have Xbox revenue, right? They own Xbox, which is great for them. And it was great during the pandemic because people were buying stuff and they were gaming, right? Well, here's the issue. So the company's revenue from Xbox content and services, including the sale of video games, declined 4%. And that is a metric unfavorably when you look at that compared to where they were. It was up 65% a year ago during this quarter. So this time last year, they saw their sales for Xbox and all their games up 65%, and now just a year later, they're down 4%. That is a dramatic swing from being up 65 to being down 4, and that's puzzling. Yes, I'm willing to bet that the chip shortage is a part of that, but that's a little puzzling. Now, the good thing is they don't make, half their money on video games. Otherwise, I would be concerned. But it's just a portion. It's just something to kind of like, oh, that's interesting. I wonder what's going on there. And it did make me pause and just think. Okay, that's all. I'm still buying Microsoft. It ain't gonna shake me, right? And the reason why it's not gonna shake me is because this next bit here, their search advertising. Yes, they own Bing. People use Bing. They do. They really do. But their search revenue grew 53%, which is why I'm not concerned. So they saw the search revenue grow 53% in the same way that Google did. They were up 69%. So it makes sense. The entire digital space grew. Again, makes sense. So they grew 53% as the advertising market rebounded. I've been telling people that. Also benefited LinkedIn's business, which saw a 46% growth. So you got LinkedIn, you got Bing, those two things were working for you. Xbox, not so much, but they are also launching, I think it's Windows 11 here pretty soon. So I think Microsoft as a whole, they got some great things going for them. Apparently, Xbox is not one of those for whatever reason. But all three are a buy for me. If I had to pick one, I'm picking Google of the three. Then probably Apple. I don't know if Google is definitely one. Microsoft and Apple is a flip. Because Microsoft still had those government contracts. One was split in half. One is still going to them. So there's a lot of ways you can go. But I think all three are good. Going back to performance, you've got Microsoft up 30%. Year to date, you got Google up 80%, 81% to be exact from a year ago, and then Apple up 60%. You don't win in either case, so you don't have to pick one at all. But those are the ones. That's kind of the news in the notes. I clearly like all three. I don't know in what list I don't have these three. I think these are cornerstone investments that most investors should have if you're looking to grow. Now, not everybody's looking for that, but hey. So all those are there for you. So before we close out, you got the link below for the 2021 yearbook. Again, those are the stocks that we thought were going to be great for 2021. Many of those have paid out, which I think is really cool. And then also, Public is running a special too. So if you're already on there, you definitely want to invite your friends, because apparently you can get up to $1,000 in some of these companies. I don't have the list in front of me. I know Tesla is one. I know Google, I believe, is one of those as well. If you're not on the Public app, you need to be on there right now. You can get free shares for every invite that you do. If you click my link, we both get a free share as well. So feel free to click that as well. I'll put that link in the description below. All right, so that's it for me. Let me know what you think in the comments. Which one of those companies, like any one of those stats, stand out? What companies you want me to cover for earnings week? Any other question? I always like answering questions. So if you have any other questions, let me know. Talk to you guys later.